India's goods and services tax turned 9 on the 1st of July. The reform that unified a fractured market is finally working better than its early years suggested. A simpler tax, a fuller till, and a second act that is still unfinished. Start with what it did. In 2017, GST replaced a thicket of central and state levies with a single nationwide tax, turning the country into something closer to one market. The early years were clumsy. Then, in 2025, the rate structure was overhauled. The overhaul was the big change. The old ladder of 5 rates was collapsed toward 2 principal slabs, 5% and 18%, with a 40% rate kept for a short list of luxury and sin goods. Most items at 12% moved down to 5. Fewer slabs mean fewer classification fights. The revenue data give the reform its report card, and June's are strong. Gross collections were nearly 1.95 lakh crore rupees, up 13.9% from a year earlier, the fastest growth in 13 months. The system now counts roughly 1.65 crore registered taxpayers. One result is worth dwelling on. When rates were cut in 2025, the natural fear was that revenue would fall. Instead it grew. That suggests 2 things working together. Lower rates pulling more of the economy into the formal, tax system, and consumption holding up. But the harder half is undone. The appellate tribunal, meant to settle disputes without clogging the courts, has been slow to become fully operational. And the inverted duty structure, where inputs are taxed higher than the finished product, still traps working capital in sectors from textiles to manufacturing. The honest verdict at 9 is a qualified success. GST unified the market and now collects more while charging less on many goods. The second act, making the machine run smoothly, is still being written. The full story is on the Indian account. Link in the description.